Welcome back. You're still watching Business Morning on Channels Television, and we're looking at the macro economy on today's edition of the program, the first one for the year. And I have here with me in the studios the Managing Director and Chief Executive Officer of Financial Derivatives Company Limited, Bismarck Rewane. Thank you so much, Bismarck, for sticking around.
Thank you.
Well, so far it's been an interesting conversation, but you see, most of of what you've said paints the kind of gloomy picture. But I'm very sure that there was some bit of good news for 2013. Could we talk about those ones?
Yeah, the good news is that you had a GDP growth of 6.8, which was higher than the global average of 2%. You had inflation down to a 5-year low of 7.8%. You had real interest rates positive. You had market capitalization all the way to 12.7 trillion.
13 trillion.
13 trillion. Now you have the Naira at the official market stable at 155. You had your external reserves went all the way up to $48 billion before it started eroding. And you are number 13 in the agricultural dependent countries in the world. For 2014, the good news is that power sector has been privatized. The cashless policy become nationwide. That's a revolution. The cashless policy is a revolution. It has a massive impact on transaction flows. The budget expenditure has been reduced. When Ngozi Okonjo-Iweala was speaking, what she didn't say is that the actual aggregate expenditure, if your GDP is growing at 7% and you are actually bringing your expenditure down, it means that you are embarking on fiscal consolidation, which is great. Oil price, which we thought will crash, we think will stay at about 104, maybe $100 a barrel. And the exchange rate divergence, which is 20 Naira, we think will come to 7 Naira. So that's excellent news.
Well, looking at the oil price, because we know that there's been predictions of a possible collapse of oil price on the back of shale oil and other discoveries. So would that likely happen next year? No,
you can't have it both ways. If you say the American economy is recovering, therefore they're going to stop tapering, that means the demand for oil will increase.
They didn't say they're going to totally stop tapering.
They're going to reduce
it. Yeah, $5 billion every.
Yeah, reducing it because the economy is growing, right? The economy was actually tanking. It was in a recession. Now we are beginning to see some bright spots. And those bright spots will help us in terms of demand for oil. So I'm not going to be carried away by the oil price thing, but the reality is that the oil price scenario is dependent on, one, that the American economy and the rest of the world will grow, while on the other hand, if there's political tension in the Middle East, then we will have another situation. However, I think the reality is that even if the price goes to $200 a barrel, if you don't curb the stealing of oil, then it's a waste of time. The problem is within Nigeria, it's not outside of Nigeria. The problem is that if 400,000 barrels of oil is missing on a daily basis, then you've got a problem. You've got to deal with it.
Okay, for the good news, we saw that inflation actually dropped to a 5-year low of 7.8%. But just before we went on break, you actually said that there's a possibility that inflation could go back to double digits.
Yeah.
As much as 11%. Why? Is it that we don't have the fundamentals in place to...
The most important thing is that your money supply growth will start in 2014. You will have a new governor. You will have a new monetary policy committee. You will have the currency under pressure. When you put all of these things together, it's definitely going to ensure that inflation goes up. But what I'm trying to say is that 11% inflation at the end of the year is not a terrible thing. It's a natural element of inflation that will come with a growth rate of 7%. That's what's going to happen.
Okay, so now let's also look at the bad news. Although we've mentioned some of it, let's look at the bad news for 2013 and what we'll probably see in 2014.
Yes. The bad news is that urban unemployment will increase to 30%. The misery index will stay high. I mean, in 2013, stayed high at 39%. Power generation declined, right, all the way to about 3,500 megawatts. The Naira lost 12% of its value in the parallel market, going all the way to 176. The external reserves declined from $48 to $43 billion. Net foreign direct investment actually declined to $5.3 billion. Our trade balance declined from $42 to $40 billion. There was one air crash. We moved 5 places down the list of competitive index, and the WAEC pass rate dropped all the way to 29.17.
So every sector was affected in 2013?
Yeah, 29.17% of the students passed English and English and mathematics, and that's a very terrible indicator. In 2014, the bad news is that the naira would depreciate 3 to 5% officially. The stock market bubble will correct. Unemployment will increase by at least 2%. Inflationary pressures will manifest themselves to about 9.5 to 11%. The military index, obviously, will increase. External reserves, because we will use the currency, we use our reserves to support the currency so that we don't go into a free fall, will decline marginally to $40 billion. And the current expenditure is actually increasing to 73%. Foreign direct investment reduces to about 4.8. All of this is unnatural in a pre-election
yeah, I was just going to talk about it because 2015 is around the corner, and we know that everything is going to hit up by 2014. We're going to have a lot of campaigns and the rest of it ahead of 2015. So, looking at all of this, do we expect to get more than the usual shock? At least, as in the economy, to get more than the usual shock.
This are natural. See, if you look at Ghana or any other of the other countries, the run up to the election means that the economy goes recessive, while the politics becomes dominant. So the Nigerian economy is big and is versatile enough to withstand that. But we shouldn't be carried away and be deceived because of this bad news. It is what we call work in progress. So the Nigerian economy remains pregnant in 2014 and will deliver its baby in 2015.
Now, and also in your 2014 economic outlook, looking at the most profitable business or sectors, you say that oil bunkering is going to thrive.
Yeah.
Why do you say so?
Because that's the game in town. You see, oil bunkering and oil theft, it's not just a $7 billion, it's about a 12...
Is the possibility that the federal government is able to stop that? Should we also be having kind of holding our breath to wait to see if that will happen?
Yeah, we have to wait and see. Because this is no longer just this is not just petty crime, this is not pilfering, this is an enterprise that is taking place. So Nigeria has to confront it, because if it is allowed to go more than this, then the economy will go into a major shock. The other sector that we're looking at for growth, cement production, wholesale and retail trading, because you're going to have a retail revolution in Nigeria. Right now, the online,
already beginning to see that.
Online, Konga, Jumia, and others. Agriculture and food processing, and then, of course, the usual suspect, telecommunication. So there's bright lights there, right? And 2014 remains work in progress, and by 2015 the turnaround would have started.
Okay.
So the medium term looks very good.
Okay. Now, for the fastest growing economies in 2014,
yes,
which ones should we be looking at? The usual suspects, or are we going to have new entrants in that line?
If you look at the fastest growing economies in 2014, the fastest is South Sudan, where there's crisis, 35%, followed by Mongolia. But Sierra Leone is 11.2, Zambia is 7.9. We are at 7. So if you were to extend that list to the top 15 or 20, Nigeria will be there, of the fastest growing economies. In terms of the fastest growing markets, Nigeria will be there as well. So and if you look, there's a correlation between fast growth and high inflation. So that's why I'm not bothered about inflation, as long as we're growing fast.
But then, looking at the risk, the data for the risk in 2014, Nigeria is top on the list of countries at very high risk.
Yes, that is the risk of social unrest. This is the economist that said that. The economist classifies countries into 4 categories: very low risk, medium risk, high risk, and very high risk. Very low risk, the lowest risk in the world for social unrest is Japan, Norway, Switzerland, and Denmark. Low risk is Germany, Namibia, and United States. Right? Medium risk, Angola, Britain, Ghana, and Kenya. High risk, Brazil, where the World Cup is taking place, South Africa, Togo, which is next door, and China. Very high risk is Zimbabwe, Greece, Sudan, and Nigeria. So this is the view of the economists, and in the year 2014. And these are just projections. But the risks are not economic risks, the risks are risks of social unrest because of some fundamental issues. But if you look at this country, the higher the income inequality, the higher the risk of social unrest.
Now, going into the new year, among the first issues that the legislature will sink their teeth into is the 4.6 trillion naira budget for the fiscal year, which was presented by the coordinating minister of the economy on behalf of the president. What are your thoughts as to how this will drive the economy?
I think that the budget is realistic. I think some of the projections are a bit optimistic. in terms of the oil price, which the minister had to concede.
The exchange rate, of course.
Right. But what is most impressive is that the aggregate expenditure is going down. But what you must understand is that the federal government is only responsible for 52% of the economic activity in this country. What happens in the 36 states? Anytime we talk about the budget or economic reviews, we forget that the states are a very, very important part. So fiscal discipline and fiscal consolidation at the federal level, which is not reinforced with fiscal discipline at the state level, will mean that the economy itself will still struggle in 2014. But what I want viewers to listen and leave this program with is that 2014 is going to be a challenging year, but it is natural. That's the price you pay for plural democracy. And that whilst in 2014 people will be getting themselves ready for a boom in 2015, once the elections are over and everybody, then you'll have 4 to 8 years of stability that will come after that.
Okay, so after the gloom comes the boom. Well,
after the challenge comes the opportunity.
Okay. Whichever way we like to put it. But thank you so much, Bismarck, for speaking with us this morning on the program. It's been an interesting conversation. Do have an interesting day and yes, an interesting year. Thank you so much. Yeah. Well, I've been speaking with Bismarck Rewane, the Managing Director and Chief Executive Officer, Financial Derivatives Company Limited, and we've been reviewing the macro economy in the last year. That is the GDP, unemployment, inflation, and other matters that relate to the economy. But that's the program for today. Thank you so much for being a part of it. I'm Harriet Abin.